Let's take a farewell look now back at 2021 returns and a look at what will produce investor optimism for 2022 with our chief equity strategist and economist, John Blank. John, for investors who owned a portfolio of diversified assets last year, what was the return in the top asset classes?
Strangely enough, for those of us who didn't like Bitcoin was over near 60% return, Terry. Now it's been halved already in January. So, we're seeing a lot of reversion to mean performances in the top asset classes already. And the NASDAQ, Qs and the S&P 500, 28 to 30% returns. Again, lost 10 or so percent. I looked this morning at the S&P 500, where at an annualized return, we're around 10 or 12%. That's the typical trend, Terry. So I would tell people in January, all we're doing is returning to traditional fair value measures. My 43.50 last year, which I kept for 6 months on the S&P 500, is what the market closed with yesterday. I was just basically a month late on that call, which is perfectly fine with me in terms of making it. And everything else is becoming annualized trend returns, which is what you should expect.
Okay, and the yesterday that you referred to was January the 26th, just to give some perspective here. But you've written that 2022 can show us a different picture. And now that we're in bear market territory, is it a better picture or a worse picture?
Relative to 2021, it is a worse picture, but worse is probably not the language. It's just going to be a single-digit growth for revenue and earnings. High single digits, 8 or 9% annual earnings and revenue growth, which means likely on a 1-for-1 valuation of that expansion, you're going to get 8 or 9% returns, not 30% returns.
So then what produces the optimism for this year?
Again, optimism is a word that I'm throwing out in the middle of a correction. The optimism is that we just get 8 or 9% returns this year, and we don't, we have a normal stock market with corrections and valuation, less Fed support, and it actually just becomes optimism in the grander scheme of things, just not optimism under Fed liquidity.
So looking for stock winners is always challenging, and against the background that we just painted, what should investors be paying attention to now?
The same thing. Don't get swayed by this market. Top industries, top stocks and top industries, top serial surprises, earning surprises that look good. All of the things that we like, and buy stocks that are trending in a positive way off these bottoms now. That's going to work for you.
You've also written that the richly valued growth stocks have already hit the brakes due to a burst in the geopolitical landscape. What does that mean?
Well, you brought another interesting point up. We've had a lot of this Russian-Ukraine conflict and Belarus and Kazakhstan, and it's clear that Putin's under a lot of stress, and it's clear that military deployments by the U.S. through our NATO partners in Eastern Europe and in Ukraine itself with equipment are raising the stakes there, and that actually probably is hitting the high beta stocks too.
So is the Russia story the landscape that matters most to investors now?
That's overstated. It's one of the landscapes that matter. I think the most important landscape that matters is the forward look on U.S. growth and earnings and revenues for the S&P 500.
And based on that, do you see the risk markets giving up the bullish sentiment this year?
No, I don't, Terry. I really don't. I just think it's going to be a lot more backing and filling, and we're going to have a lot harder need to keep people patient because it was just too easy last year.
Okay, you've got 3 interesting stocks on your radar now. They are Seiko Epson, China Shenhua Energy Company, and Apollo Global Management. How did you catch your attention to these 3?
Well, the latter, Apollo Global, is an alternative asset manager. So that's just taking you in a different way, looking for different alternative assets, but I think is fascinating at this time from an asset allocation perspective. Seiko Epson is a Japanese office equipment maker, and China's Shenhua Energy is actually a big supplier of a lot of energy transmission in and ports and railroads in China. So let's go through these. Seiko Epson, value score of A, growth score of A, $8 a share, Terry. $8 a share. I mean, you gotta like stuff if you're worried about bubbles. That things like Seiko Epson. China Shenhua Energy, Zacks #1 rank, $10 a share. Unreal. And then you get to Apollo Global Management, again, value score of B, higher beta here. You got a 1.6 beta, but you got a PEG ratio, a PEG ratio of 0.3 and a forward PE of 12 on a stock that trades at $66. So if you're worried about, you want to get in front of and rotate into stocks that are not, overvalued right now, these are three you want to look at.
Our chief equity strategist and economist, John Blank, looking at 2022 with some optimism. With John, I'm Terry Ruffalo. And find out how you can get the just released 5-stock set to double report, where Zacks experts each announce their single favorite pick with potential to gain 100% plus in the months ahead. Go to Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.